All right, ladies and gents. Impromptu stream this evening. I don't think I've done anything like this in a very, very long time. Chat's going to be not on the screen like it usually is. Going to be off to the side. Apparently, that's how the rest of the world does it. Umoja, Umoja investing. What up, Umoja? Obviously, probably a subscriber to mine since I just started this damn thing. Um, all right, so I've got a very specific mission today and very selfish in nature. So let's just kind of see how this goes. Um, I think Bitcoin has started its next run. At least it looks like it's on the way, and I want to capitalize on that through the U.S. stock market with options trading. So what we're going to do is we're going to attempt to forecast the BTC run, and then we're going to see if there's a bigger trade to take on it in the options market. Is really what we're going to do. So we got our work cut out for us today, and yeah, let's get to it. So let's take a big zoomed out approach here. I do want to keep a little bit of eye on markets so we can. Oh, look at that! They got rid of the price. Um, so we can kind of look at what's going on here. We can go naked chart for a little bit, and I think Bitcoin's an interesting spot. I think a lot of cryptos are in an interesting spot. You got BTC's pegging up here right at all-time highs. You got Solana with a gigantic, what looks like a cup and handle pattern. So right back to getting close to highs. We're not there yet, but we're getting there. 250. We're at 172. You got BNB, which is now in all-time highs. Oh, there you go. I knew it was flagging out nicely. Um, and this is starting to get going. So a lot of good things. Hey, what up, Ian? Cryptorido? Not sure what you're going for there, buddy. Um, and these are mostly the ones that look good. Ethereum's up here too. Ethereum should be on this list, but it's not right now because I don't have it up here because I'm on today's coins. But I think BTC maybe up for it could be a next leg or it could be something larger. I'm of two minds on this, and so that's one of the reasons why I wanted to do the stream is to kind of make it one mind, and I guess kind of finally formulate an opinion about what's happening. So let's go to the weekly chart for a second. Crypto stuff generally kind of moves, it's generally kind of moved the same, right? You get these big exponential runs, and then you end up in a position where things. I guess it's gonna take my chart off there. um, you get these big exponential runs. You get these big long low periods. Well, we kind of are coming out of a lull period here. Okay, we did a live stream on Saturday. We came to the conclusion we're probably going to go to around 200,000. It's just kind of the general thing that crypto does. Does it happen again? So 200,000 really wouldn't be too bad. Let's actually go to a different chart. We'll go to one of these charts that I don't have drawn up too much. Oh, look at that head and shoulders pattern. Where does that take us? Does that take us to 200,000? It takes us to 300,000 for that particular one. All right, is this Bitfinex? Bitfinex should do fine. That goes all the way to 13, so that should do fine. So crypto goes through these cycles, and um, we got this going up to about the 200,000. Let's put a square up here. We got 200,000, and I'll quickly tell you how we got to that, to about 300,000. I'm on a log chart, so it doesn't look like it's a big move, but it's a big enough move, right? So we're headed up probably to 200 to 300,000, and this 200,000 is derived from the fact that Bitcoin essentially in the past has gone up a percentage from the day that we've had the halvening. So it was 13,000%, then 3,000%, then 900%. So it goes down by about a factor of 3. So if you take roughly 1,000, you roughly get to 3,000. Take 3,000, you roughly get to 12,000. This is 13,000. So we're pretty close. So you could argue dividing 900 by 3, you would get 300%, which takes us to 203,000. Blah blah blah. So that's roughly kind of where I kind of guesstimated that we could be headed to, and I had that inverted head and shoulders pattern, which was 300,000. So I just drew this square up here. And I think that's about as good as any estimate you're going to get. Obviously, everything is just guessing at this point, but there is an expectation of higher. We have been in a bull market. We so far have failed to roll over, so I think we're going to keep going up. And then if we do circle back real quick to the daily time frame, I think we're in a good spot. We're in such a good spot. So let's take a look at just this recent history. It's starting to look, I dare to say it, and that's crazy to say this, but I almost feel like we're a little bit like 2016 going into 2017. The only reason I say that is because we do have these larger structures that we've built, and we're kind of hopefully breaking out of this one. We had this one down here, which was just a big old thing. We had a higher high here, which makes this not a base, and then this becomes its own base. If you're going by IBD standards, this was a structure, should have broken out across this high, but it didn't. It came back in, did it again, and then it broke out from this high. So this was your actual base, but this is all one structure in my eyes. And so you have a big structure down here. Now I have a smaller, more concise base. Excuse me. Just got done eating some food. Here we have a nice cup base. Breaks out, nice consolidation into a bigger double bottom with a handle pattern that we're starting to break out of. I need to get some water. Hold on. Whoa, I guess I didn't mute my mic. I thought I muted it. Sorry if you guys heard that. Um, so I think we're looking a little bit like 2017, mainly because the basing structures are larger. And if you look at 2016, 2017, that's what we get here. We get larger basing structures. We got one here. We got one here. And then we started with the smaller, more normal sized kind of running bases. This is a base on base pattern. I won't go too much into it, but that's a base on base pattern. It's basically two bases on top of one another. This is a double bottom with a handle. And then this one is a smaller cup with a handle. Well, it's a cup with a handle. And then we get a smaller cup with a handle. And then we get the blow off top for 2017. So we have these larger basing structures, and I've gone over this with you guys in the past. Things got more narrow in terms of the depth of the base for the most part, and they also got more narrow in terms of the length of the base going into the blow off top. And this is a beautiful basing structure. We obviously don't have that many bases here. We only have a couple. Although you probably could consider this a base, and it is. This is a small base right here, bigger base right here. So I don't know if we're necessarily in the point where we're going to really be comparing the two bases or the two market runs in an apples to apples. I don't think it's fair to do that, but I do think that we are in the middle of a bull run. We are in the middle of a bull run here. If you want to amalgamate this to this third one, if you want to call this 1, 2, 3, 4, 5, 6. Don't think we're going to get to 6, but maybe we get to 5. 1, 2, 3. Next pop up to 4, whatever the case may be, right? And then okay, so let's look at these other runs that this does not look like. So we say it kind of looks a little bit like that. And here we got BTC moving up off of lows on the very crackhead chart. We look at the last couple of runs. So this last run here really wasn't a run, although it was a run, it doubled. It was a good little run, but you had a double bottom right here, which we did call out as a double bottom in real time. We had a buy lower though, and then the double bottom buy as well. That stalled out at prior highs. And is there a possibility that we stall up here? Well, yeah, we could. We did stall out here. We did stall out on this base. It tried to go higher and rolled right over. One of the differences though is our tool to time the market gave a sell signal actually up here, like on the day or the day after that it topped. So that was a little bit ominous. Don't always sell on all of those, but it gave a market winning correction, like right up here at the all-time high. Right now we're in an uptrend with 0 distribution days, so we're looking good right there. So we got this going over. So I don't think we're here. I don't think. Because we're looking pretty good. We're starting to break out. We have pretty good volume. we're looking pretty good. So I think that's not bad. Then you go to this, base up here, or this run up here, and you do have a larger structure, which does look a little bit similar, although this is not one structure. You could arguably, this is two structures actually, right there, and then this is another structure right there, one there, one there, and then here you get probably the base we're likely in now. If you want a apples to apples comparison, we're likely in this base, and then there's another larger base up here, a beautiful run out of here, and then we start losing momentum. You see it in the RSI, and there's just too many. There's a base right there. This could be a base on base, although it's a little bit too deep in the prior base. Then we fail breakout here on lower volume. Then we start to roll over. So we do lose some momentum. We're not up here yet. It doesn't. I don't think we are. It feels like we're due another large run. So again, we're probably here. We got some bigger bases, a smaller base. Here we have a bigger base, one smaller base. Now we're larger again, indicating likely more accumulation. So, people that don't believe this run is real did most of the selling in here, and the buyers scooped it up. And so we're looking to move up at this point. That's really what's looking to happen. Hasn't fully happened yet, obviously, but we are in, recent highs compared to over here. Basically all-time highs. We're living here. We obviously can roll over. We can fail at any time, but right now we're trying to break out. So you don't want to think failure while we're breaking out, but I do want to point that out. You don't let that stop you. What you do is you find a good stop loss, and then you let the chips fall where they may and hope you did something wise. So I think we're in a position where we're going to have these legs. And so again, what I'm doing today, and I'm going to write this down, I want to research options trades on Bitcoin derivative stocks, on BTC stocks, and I want to find the good trades. That's what I want to do. I want to find the good trades. I didn't have a chance to do it today as the market, as Bitcoin was doing really good. So we're going to do it now. So that's kind of the backdrop to what it is. We only get so many really good bull runs in Bitcoin. We don't get them every day. We know that. There's always tradable opportunities, but to what extent? And for what I do, these are the tradable opportunities. This run here, this run here, this run here, this probably, actually I think we had that run too there, and this run here for wherever this ends. So we are in the middle of a good opportunity, and we'll go to the daily chart and we will look at the more recent time frame, likely with the $200,000 price target, which sounds crazy to actually say, to go to actually into 6-digit prices. When I got in, Bitcoin was at $3,000 just before this breakout right there is when I got involved in crypto. So crazy stuff right there. So okay, that's a long long history, and I know some people have already joined, some people have already left. Fuck those people. Okay, this is for the people that want to do the homework. Okay, this is homework right now, is really what this is. Bitcoin options trade homework. It's in the title. So we're going to look at the run, and we're going to see what it could possibly do, and we're going to see how we can make money on it in the options market. So we're in a really good place here. Let's go to the index chart here for a second. And got a lot of alerts here, got a lot of stuff going on here, and we're in a good spot. I want to go through this base for you people that are not necessarily as educated on what this is exactly. I don't know what is the Ian, if you know, or if someone else that feels like chatting, what are people calling this up here? I have zero idea because I don't look at anything. I just look at the charts. I don't look at social media. I don't look at YouTube. I don't look at anything. What are people saying about this structure up here? Is anyone talking about this? I'm really curious what people are saying, because I view this from a specific lens that I think is an accurate lens. I think it's the right lens, and this is a double bottom with a handle, is really what it is. It's a classic double bottom chart pattern, and it formed a handle, broke out at 69,272 from an early buy point, and we have traditional buy points up a little higher. I don't know what anyone else is calling it, but maybe they'll call it a cup with a handle. I don't know what they're calling it, but to me it's a double bottom with a handle. So a double bottom, if you don't know, isn't this. This is not a double bottom. Not a real double bottom according to the guy that I follow, um, William O'Neill. The William O'Neill double bottom looks like this. Okay, it undercuts the first low. The double bottom that William O'Neill talks about undercuts the first low and then rallies. So your first low in this one is this low. This is the first low. And it undercut a little bit here, came down here and shook out again. Okay, high volume on the bottom, and that's been our high volume ever since. Okay, so I do believe this is a double bottom with a handle. I don't often see them with a handle, but just the fact we get more consolidation just points more to me the fact that this is going to be an exceptional rally. So let's take a look at, okay, well, we know this is a double bottom with a handle, and this 72,713 is the high of the mid, it's the midpoint. When you have the double bottom, your buy point is the middle high, okay? That's your buy point. Now that we have a handle, we probably could lower this to the top of the handle, because that's kind of more realistic actually about where buy point should be is the top of the handle. So it probably should be this high of 71,939 is really what it should be. I got a 72,713. So we're getting close. Looks like we're rolling back over here again a little bit on the my crackhead chart. That's okay. But we're in a good spot. One thing I like, and I was kind of waiting for the day to close today, is that we do have higher volume today than we did yesterday. And I think that's great because we went above, and I said it in my show today, I'm like, if we can close today towards the top of the range on volume higher than yesterday, I think that's amazing. And that's exactly what we did. And I'm really happy that happened. Not that I'm Nostradamus, I'm just happy it happened. Um, so yeah, where were we this morning? We were right here. Wow, we got all this volume late in the day. Nice. So some distribution here, the volume aggregation tool shows it. So it's not that the sellers have gone away. They haven't gone away. The question is eventually, will they pause or stop their selling? I think that is the major question at this point, and that is going to lead itself to the breakout, whether we do breakout or not. I think that's going to be the key there. So that's how I'm approaching this market. I'm looking at these signals. I'm looking at the volume. I'm looking at where things are in context to where things have been, in context to this interim base structure, in the context of where it is on the all-time high, and in context of the run that we've already had, and in context of the support that we've gotten. So getting a lot of bullish signals here. The only thing we're missing is volume, but we are above average now. We got above average 2 days ago when we tested this early breakout, and we got above average today when we broke out. And now we're trying to chunk our way higher a little bit here. So the signs are here. We're at least going to attempt a breakout. And sometimes that's dangerous. Sometimes it works out really well. Okay, but there's a lot of really good signs here. Still doesn't guarantee anything. I want to preface that. 18 minutes and 20 seconds into introduction. No wonder I'm not on YouTube anymore. Um, all these fucking kids probably can't listen to me talk for more than 3 minutes. But anyway, really, really good stuff. Okay, so a typical base breakout from IBD standards is 20%, 20 to 25% before this thing before it bases again. So the last time we broke out from a basing structure was here. This was our last actual, what I would argue is the base, and we rallied 50%. Okay, so we rallied from there to there 50% with kind of a monster shakeout in between. So the last run was 50%. I'm going to write that down. Okay, so that's the last almost vertical leg. We had it move up, it went sideways for a week or two, and then it had a huge launch off of that. So we could do something similar, but let's mark off 50% from the breakout point. And I'm going to go to this handle, which was a little bit lower, which was 71,939. Bear with me here. We're going to go 50%. So that's about 108. So it's 108,000. Okay, obviously in all-time highs, we got 6 digits at that point. Will we stall prior to 6 digits? It's really hard to say. When we got to 5 digits for the first time, the market didn't really do too much. Pointed this out before, and I think it's something that is worth pointing out again. So we can go back here. The first time we hit 10,000 on the way up here. Where'd all my squares go? I didn't take them off, did I? I don't know, maybe I did. First time we got to 10,000, it was really much ado about nothing for the most part. So we did have the biggest shakeout in history, biggest turnaround in history right here. This was a big flip-de-doo. So we got to 10,000, surpassed it. The high on this day was 11,000, almost 400. So that's a pretty big high. And then we came crashing. I actually thought this was the high. In real time, I thought this was the high. And this was the biggest turnaround in history. Look at the volume that came in on that day. Look at that. So as a trader, you have to be infinitely flexible. Okay, so I thought that was the high, and I remember selling. I remember selling on that day, and then I remember buying back 2 hours later because the bottoming pressure was more intense than the selling pressure on that day. And then we basically reversed almost immediately and proceeded going higher. So there was a shakeout around 10,000, and it makes sense. It's a big number, right? You coming from 3,000 to 10,000, that's huge. And so we could do something similar going into 100,000. Absolutely could do something similar. People are going to say, oh, can't go past 100,000. Well, maybe it doesn't. I don't know. Who the hell knows? But all we can do is find possibilities, trade possibilities, and act accordingly. And try to take profits out of the market. That's a really important thing too. So getting back to the index chart here. So that's a 50% move. And I didn't, you saw what I did. I just took the last run. I said the bases typically go up about 20 to 25% according to IBD, but cryptos are more volatile, so it makes sense, right? Now let's look at this prior base where it broke out. Let's take my alert level because some really good volume came in there. So let's take that to the run. So that was 45% to that high where it got choppy. So that's 45% to about 60%. So 50%, give or take, is about right. So it looks like if we break out here, we're going to be on a fairly quick run to around 100K. All right, to around 100,000. Now, one thing we can extrapolate, which is I do try to extrapolate, and I will say while doing this, I don't expect a lot of great results because this last run, if I remember correctly, and maybe I'm not, these weren't great runs for the stock community for cryptocurrency. So I don't fully know how this is gonna pan out. So I'm just gonna take these dates, and then when we look through our back testing for options, we're gonna do that. So I'm gonna take the close of the prior day before the breakout, which is look like October 22nd, 2023. I'm going to take that, and so we're going to call the run high this one December 5th, 2023. So that's run one. Okay, and the second run is going to start on the breakout here. We'll do it on the breakout day because it wasn't that crazy. February 12th, 24. And then all the way up to, let's go to the actual, well, we'll go to this because this is a crazy day. So we'll go to this one. Hey, what's up, Alex? Yeah, B&B, it's been looking like a monster, man. It really has been looking like a monster. And it's behaving like one right now, too. So we're going to go to March 5th, 2024. So that's run two. Okay. So those are the last two runs. And I'd like to use earlier ones than that, but each crypto run is weird. It's so, it's, it's kind of a weird thing where, um, I don't want to go too far back in history, although it could help us out, but we'll keep it nice and concise for right now. So, all right, I'm gonna pull up the stock account here, and we're gonna use Thinkorswim because we're gonna trade options here, and this is the best vehicle I have available for making really good money on a cryptocurrency because as a U.S. citizen, I have garbage options in terms of trading leverage. If you guys know of any good ones, I was going to look into Kraken. I need to write that down. I haven't done that yet. So busy with family stuff, I forget about making money. Um, so there's a few stock leaders in this industry. Um, One of them I do have on here, CLSK. So CLSK, this one, and I'm going to write this one down. So CLSK, in terms of volume and leadership, recently And this year, I've just look at the tremendous amount of volume increase in this, and big volume increase generally gives me a lot of confidence about a name. Okay, and so I think these are those two runs that we were talking about. We're gonna look through historically kind of what this did, what this run did, and what this run did, and what options would have been good to get, how long it took, so we know what kind of options that we're looking at. Okay. So, I mean, that looks pretty good. That goes from 3 to 12 and then from 8 to 18. So, not bad. Some pretty good runs right there. It goes more, but you don't want to get too greedy. You just want to get a good, you want to make a good chunk of change on these. So, but CLSK is one. Riot Blockchain is used to be the one that I went to because I just noticed it was the leader. And so keep in mind our volume really has steadily been increasing here since, 2020, whatever, 2022. You look at Riot Blockchain, it's kind of the opposite. It's not too bad now. Okay, but if you look at the price action, it's a little dead in the water. Here's those other two runs, and look at how choppy it is. There's lots of people selling Riot up here at 18. So we can go from 9 to 18. Just looking at the stock chart, it's one thing to look at the crypto chart, but when you're doing these like cross asset analysis, um, it's really I don't do this all the time, but every time I have done it, I've done a good job, and I've done it by really just staying true with a balance between the asset and what crypto's going to do, what Bitcoin's going to do. Try to stay true to that because you could say, oh, Bitcoin's going to go up 50%, so this is going to go up 50%. Well, it won't. This will probably go up more than 50%, as a matter of fact. So, from that perspective, you want to be real with it so you maximize the potential, but you want to maximize it to a point where you're erring on the side of caution. Okay, we do want to be wise about it. I find the mining companies a bit scary because you have to understand their business model. Um, yes and no. So I did have some success, well, lots of success with Riot actually. Um, let's get a little more history in here. I did have some success with Riot Blockchain, simply due to the fact that, because I mean, charts are charts. I'm just going to be honest with you. And when things get hypey, Alex, when things get really hyped up, fundamentals go out the window. It's all technicals because you're not going to get an earnings report for 3 months. Like, here's an earnings report right here. It breaks out like mad, and the entire run happens before the next earnings report. So who gives a shit? It really doesn't matter. What you want to do is look apples to apples within the mining companies to find the leader, the one that, because there's people that are trading this sector, they're going to lean towards one or two stocks. Um, they're going to trade the whole sector, but they're going to lean more towards one or two stocks. And those are the ones you want to be invested with. You want to be in with the quality ones that the smart people want to invest in. So the same thing goes with any other trade, actually. But because this is a sector driven play, we want to stick to that tenet. We want to find the leading stocks. And like I just mentioned, so Riot used to lead. Look at all this volume, just like CLSK, incoming volume got really crazy. This was a run that I bitched out on. Would have made just hundreds of thousands of dollars probably, and since then it's been a piece of dog crap. It comes all the way back down. So this run's already happened. So what this means is that there's people that still are holding from up here. So they're looking at any opportunity to sell, even several years later. And this is just dead for the most part. Now, it doesn't mean it's not going to move back up to 18 or 20, but look at the hard line that 20 puts in. Really, it's 18, but this is a clear hard line. If this goes past 18 and 20, I do think you probably have another chance to go up here to this 40 level. Okay. So look at all the work I was doing on it in the past here. Looks like all these trend lines I had to abandon at some point, but um, yeah, just really, really interesting things. So you go to CLSK. I can't just type in here because it's not TradingView. You go to CLSK and it's a little bit different. It's a little bit different. It's not, night and day. It still has this big peak over here, but look at the volume interest. So the people that have this, um, they're not necessarily incentivized to sell. You do have kind of a double top going here at 25, but if the market is going to go up 50 plus percent, I think that can get blown through. You got good volume accumulation coming in here. Uh, this is all like nothing. There's like nothing down here, so it's just this doesn't count. This counts, but it's not. There's not a lot of volume here. There's not a lot of people holding bags, so you don't have as many people who are in a position where they Like, oh, shoot, it's up to 50% of my loss. I'm going to sell. We don't really have that overhead. At the same time, it doesn't look amazing. Although we do have support at 15, which is why I think it may be advantageous to try to look into buying down here early because the juice you're going to get is good. Now, one thing I'm a little bit nervous on is generally these will lead BTC. And that's kind of one of the weird things is these are not leading Bitcoin right now. Now, they haven't always led Bitcoin, but enough times they have where it's a little scaring me a little bit. So I'm not going to go all in on this trade, obviously, but I think I want to take a calculated risk, and that's what we're here to do tonight is figure out that calculated risk. So CLSK is a good one. I do have a list down here, as a matter of fact, of other ones. Let's look at those. We got Riot, we got CLSK, we got Mara. This is another one that kind of has already had massive, crazy runs. And then volume's not bad here. But you see, it's not as controlled. CLS, one of the reasons I like CLSK is because it's controlled. This is, I think it's a lot wider to go from 34 to 15. CLSK is going from 25 to 15. So why does this keep popping up here? This is real. I don't understand. Every time I click on something, it pops this up. How can I make this not pop up? You're killing me. Maybe it's a setting or something? Buy, sell, custom. It's really annoying. Anyway, so you can see a little bit more concise when you look at something like Mara. So there's just a lot. You see here it undercuts this. It's a lot more random. I don't like to see random. It's really not something I'm a fan of. Oh, that's stupid. It's really not something I'm a fan of. So Mara's probably off the list. Then we've got WULF. And this one's a little more interesting. This one's not bad, actually. Got some nice tight price action going on here. That one's not too bad. This one's not too bad. WULF's not too bad. That's some pretty tight action. Look at the pocket pivot today on this name. That's crazy. Remember I told you these lead. This is kind of leading a little bit. I actually kind of like this. I don't know if this has options, though. It does. Oh, shit. That's scary. Okay. So this one's pretty interesting. So I'm gonna put a box in front of CLSK and a box in front of WULF. So this is nice and concise, controlled price action. This does undercut the slow, but it's not dramatic. And look at this massive run. Look at where the volume steps in here. This actually looks pretty good. This looks really good. So hasn't really had a major run yet. That's interesting. That's really, look at this fucker could get to like 10. So that's crazy. So that looks pretty good. That looks pretty good. That's interesting. I do like that one. Good, good, good. This is why I'm doing this. CIFR. I don't know anything about any of these. This one looks a lot more random, a little less controlled. The range is about 50%, actually more than 50%. So probably not as interested in that one. And it can still have a move, but I just can't trust it. IREN. Let's look at this one. Look at this increasing volume. Not bad. Not controlled, not tight, but maybe that's not a bad thing. I don't know. Very volatile. Just went up 100% over the past little while. This one also has options. Average trading volume is actually not bad. You're looking at what, 8 times 14 or 8 times 10, so $80 million in average trading volume for the day. That's not too bad. That's actually not too bad. It's okay. I'm not mad. I'm gonna write it down, but I'm not gonna put a square in front of it. You know, some of these weird ones will have better, more explosive moves, but they will be more volatile as well. I'm not really into that. I've never dated strippers. And then Hut. This is the last one on my list here. This one doesn't. I mean, he's got tons of support down here. It's not. It looks like it's never going to drop below $4 or $5, 3, 4, or $5. But I mean, it is kind of pinching in here a little bit, which isn't bad. I don't know if I want to step in front of it. It does have options. It does have options. It's going to go a little crazy, but could also come down in just as crazy. So some of these you got to buy super deep in the money too. And this spread is actually not. Look at the spread on this 1 to 106. So I'm going to start going into options here in a little bit. A lot of people don't trade options, so I may lose a bunch of people. But if you're interested, ask questions and hang out if you want to. So this one's not too bad. It's not too bad. It's not great though. We don't have great accumulation signatures. We are above average a little bit on a few candles. Average volume's kind of drifted around. I mean, so, Alex, when you talk about fundamentals, the charts actually can sometimes show you the fundamental. And I think you see the differences. I'll bet you'll find CLSK is probably more profitable or growing faster, or there's some metric they clearly like over something like a HUT. Maybe it's a lot bigger. It's probably all of the above, right? But CLSK, in my opinion, from what I found recently, is a little definitely more healthy. Look at the ability for it to get up. It's got a wide range, but as we found out, it's definitely not as wide as some. Um, so coming back down, it's only down about 36%, as much as 40 versus 50 plus percent. So it's doing some things really well, and it's hard to say if it's gonna, you know. So going up to 40 from 16 is pretty good, and I think that's an easy win from a technical perspective because crossing 25, there's not much in the way to get up here to 40. And then if it gets really good, it'll surpass 40. So we'll just kind of have to see what's what. Yeah, I'm really sticking to BTC and options trading tonight. I'm not trying to go crazy down any deep crypto rabbit holes. Okay, so we've established Bitcoin can maybe go on a 50% run. Let's take a look at these other runs that we had here, because we just took a look at Bitcoin and those runs. So the first run was from October 22nd, which was here. So the run happened from October 22nd to yeah. Oh, you know what? We could look at coin. I didn't even think about it. I didn't even think about it actually. I don't ever trade coin. It's just like from a stock perspective. Yeah, it's had a good run this year. Yeah, maybe it's going to be in vogue, but I've never. It's always looked bad every time I looked at it, which is why I don't look at it. And it doesn't look too bad. It's got a couple of good basing structures on it. Is it earning money? Yeah, it looks like it's actually profitable now. Look at that. So you go from down to flat. That's good. To $1 to $4. Wow, that's got some earnings behind it. That's actually looking pretty good. All right, we'll write coin down as well. That's not bad. That's a little cup and handle breakout. That goes for 50%, 48% right there after a big old nasty shakeout. So, I mean, maybe it'll try to go. Now, we're not done building this base yet either. That's one thing about. Remember I mentioned sometimes the stocks will move before the cryptos. So, this one's still building. Maybe that's an ominous sign, maybe it's not. Okay, yeah, maybe we'll get some juice from that. But that's one negative for the run starting sooner than I guess is just the fact that it's not up here near recent highs. It's still a little bit more muted. Although we did get a pocket pivot today, so that's good. Yeah. First pocket pivot in a while, not bad. Also pocket pivot off of these moving averages. There's your 10. Which ones do I have up here? 10, 50, and 200. I don't have the 21 up here. I should probably add the 21. Although I'm pretty sure the 21 would, and the 21 is an exponential. Exponential, moving average, simple. There we go. I'm not sure what color. Use a stupid orange color. That'll work. So, yeah. So there's the 21. There's the 10. Blue's the 10. Orange is the 50. It used to be green. I got my colors all screwed up. Um, yeah, that is a that is a nice pocket pivot over a lot of moving averages. That is an early entry signal on Coinbase. right there. Early entry signal. Now, earlies are weird for options because when you're trading with an option, time is not your friend. So you want to be, you want to time the market as really best you can. You want to be really, really concise with the timing. And sometimes these early signals, such as this, like a pocket pivot deeper in the base, they don't do you a lot of favors. They're good things to notice, but they're not necessarily entry signals for an option strategy. If you want to buy the stock, that could be good. Now, it's not, here we were actually running pretty nicely. All right, well, let's take a look at Coinbase too. So we had October 22nd, we said the run started, which is right here. So the stock market didn't fully believe it, rallied up, came back down, then it started to go, and just it kept going. And so that topped out on December 5th. And so as you per usual, stocks keep doing their own stupid thing. And so that just kept going even after the market had kind of already topped. And this next one started February 12th, which is, yep, good. Not a bad spot. That's a pretty good spot to pick this one up. And then it goes on a rally for March 5th. And as usual, it goes for a bunch more. Yeah, the stock, it's kind of weird trying to marry the stocks with the underlying BTC. It's just strange. I'll just say it's just weird. So yeah, it's a little bit weird. But yeah, this one kept going. So and really good runs. I would say really good runs. So let's use coin as our, since we're on this one. Thanks for pointing that out, Alex. I appreciate that. So let's use coin as our first one. And so 50%, these things tend to run about 50%. At least that one did. Let's see what this one ran. Sorry, I don't have the same thing here. This one ran 90% from that breakout point. Holy crap. Run one, I'm just going to call it 90%. I'm not going to nitpick the exact because we can never be exact. And then this one ran, damn, 95%. Imagine what these options profits are going to be. So, all right. So now we're going to go to the analyze grid. And here we can actually go back in time. And take a look at it. See, I've lost a bunch of people, probably because they're not in the U.S. That's okay. We're going to go back to the first run, October 22nd. Now, this only ran for less than 2 months, and so did the second one. So I'm going to do what I normally do with my options. Time them. I'm letting you know this ahead of time. Time this between 45 to 50 days or thereabouts, erring on the side of more time. So, for instance, here we have 46. I can do 46, but this is like 40. I would move up to 74. Okay, so I want to keep 45 is kind of my minimum, and this is weird that this barely hits it. So, oh, but that's today. Okay, so we're going to go back to October 22nd, 2022. And that is a Saturday, so we got to go to Monday. And we're going to go 53 days, perfect. We're going to look at all the strike prices. What the heck is the X then? If it doesn't mean to close. Don't you stupid ass. How stupid is that? How stupid is this too? I don't want any of it. Okay, there we go. Okay, so we're going to go for 95% run. And so the close on this day was 66.38. Okay, how do I want to write this down? So October 22nd, 66.38. And we're going to multiply that by times 1.9 because that's what we said the first run was. Let's do them both 90%. We'll do this one 90% too. How's that? That seems kind of sensical. We'll keep it apples to apples. Because if we're going to do 50%, 50%, maybe we'll do 50%, which means these will do 100%, which means we'll have a decent expectation of kind of a measured move, if you will. Okay? Could do more, could do less, and I'm sure I'll fuck it up along the way. But we got to do some kind of a homework here. 66.38 times 1.9. 126. So our target for this option is 126. Okay, so as of right now, the way that these options work is that who does not know how these options work? Because I'll go a little deeper. Otherwise, I'll just go right into choosing the option. Since Alex is the only one chatting, I guess we'll listen to Alex. If he didn't already leave too. Maybe he already left. Who the hell knows? I have no idea with options. Okay. Is this something you want to do, or are you just watching just because you're bored as shit? Because I'll give you a brief explanation. If it's something you're interested in, I will go a little bit further. Hey, what's up, Batman? Batman's here. Okay, so Batman wants to explain. All right, I'll go a little bit deeper. Um, First, I do want to say ASMR into the mic. Options will destroy you and everything you hold dear. Options. Options will destroy everything you hold dear. Options will fuck you bad. Let me start out by saying that. This is one of the most risky things you can do in the market, which is why you will make a fuck ton of money with them. Okay? But they are the most risky thing you will do. I only trade options when I have like a 95% certainty that something's going to work out. Okay? I don't do it for fun. I generally don't boredom trade. There's been once or twice, but I generally don't boredom trade with them anymore. Long dated in the money. Okay. That's not what we're doing. How long you been here, Batman? 3 minutes, 5 minutes, 10 minutes, 30 minutes? God, I've been doing this 47 minutes already? Holy crap. I'm the most boring man alive. I'm probably the most boring man alive. Um, Hold on a second. So, but I will say this. Because of the options, because of the way options work, it is forcing me to be very attentive, and I am only successful with options because I have to be that attentive. Other than that, I get scatterbrained and I suck and I lose money. Okay. Long dated is bad because they decay, though, right? No. Well, it depends on what you're doing, Alex. So I'll put it to you this way. Before we look at all those numbers, let's take a look at these numbers right here. This is what's called an options chain. Okay. When you want to buy options, you have all kinds of options you can buy. You can buy, this one expires on October 21st. Well, that's negative 3 days for some reason. This one expires on October 28th. Keep in mind, we're back on October 24th, right? So this option expires in 4 days. So that means that if you buy this option and it's not profitable in 4 days, if you don't sell it prior to that, you will lose 100% of your money. This expires on November 4th. So if you buy an option for November 4th, and it expires in 11 days, if it doesn't do what you want it to do in 11 days, you will lose probably all of your money. This one expires on November 11th, and so on and so forth. So when you get down to January 17th, 2025, which is like 3 years later, 816 days, this expires in 816 days. If it doesn't do what you want it to do by then, you can lose all your money. But you can sell it before it expires. So you can sell whenever you want. It's not a big deal, okay? So just remember that. You can choose how long you want this trade to last, okay? That is kind of a benefit and kind of a drawback. The drawback is that you don't do all of your homework, which is why I've spent 45 minutes doing homework. You don't do all of your homework. You don't give it enough time. Okay, if you don't give it enough time for the trade to play itself out, you will lose money because you didn't give it enough time. Okay, it's just the way it is. Also, you won't maximize your profit. So say you decide you want to do January, you maximize your profit by choosing which one of these options to buy, and you choose it by the strike price. So the expiration date and the strike price. You choose your expiration date, then you choose your strike price. That's how I do it. Okay? Occasionally it goes the other way around, but let's pretend that we have a system here. So you go by the expiration date, and then you choose your strike price. So that's how this works. The reason why they say go long dated is because it gives you more time, because you're not going to be subsequently
shaken out of your position, or I'm sorry, you're not going to be subsequently closed out of your trade before it has a chance to mature. Because most traders are of the understanding that they have no idea how long a trade is going to take. Can we be clear on that? A lot of traders just have no freaking idea. I, however, apparently think I know better, and I think I know when something is going to work. And so, from my perspective, I do not. I want to have a concise time frame, and I want to pick a good strike price. So if you're buying a lot of time, it's because you don't know what you're doing, and that is okay. If you're nervous, buy more time. That's the right thing to do. If you don't like this 53-day option here, if you're like, oh shit, 53 days, then just buy the 88 or the 144. Just do it. Okay, it'll make you feel better. You'll make a little less money. Just don't lose money. That's all you got to do is not lose money. So don't worry about it. Okay. So that's the thing with expiration dates. How long is this trade going to play out? I just told you, and by looking at this, that this trade, here took like, 52 days to play out. This trade took, was maybe 40 days to play out. So I told you I generally look at trades expiration date between 45 to 50 days because those are the types of stocks that I am enticed by. So for me, I'm going to look at 45 to 50 days, and I said I'm going to err on the side of more time, if you remember me saying that. That's due to exactly what I just explained to you. You always want to err on the side of more time. You don't want to go less time. You can, and you'll make more money, and I did fat finger myself into a big profit not too long ago, but that was a mistake. I just got really lucky and made money on it. Um, so, is that pretty clear on the expiration date side of it? You want to give yourself enough time for the trade to play out. Err on the side of more time. Okay, that's how I do it. Other people say by long dated because again, they don't know how to market time. Okay, so they need to buy more time. Make sense? Because they don't want to buy something 45 days out and it take 150 days to play out because they don't understand what they're doing. Now, you may ask yourself, the next question I usually get is, well, what if it doesn't work out in 45 days? Okay. Well, I will just say this. So in this situation, right here, it's relatively simple because we buy here, it moves pretty quickly up. So I'm already in profit. So I'm comfortable holding through like this pullback, right? I'm comfortable holding. In this situation, it's a little bit more tricky because this one broke out like here, and then it comes all the way back down, right? So I will actually sell the option here, and then I will get back in later. So once the trade's working again, I will get back in. Even if I have to get back in over here, I will get back in. Okay. Once I'm confident the trade is going to work, I can jump back in. But I won't let the full 45 days go. That's just not how I do it. All right, it's just not how I do it. Some people will do that and they say I'm stupid for exiting early. Maybe I am, maybe I'm not, but it's how I do it, and they have no right to call me that. But I've been called that before, that I'm stupid for doing that, and I'm generally correct. So they're right in a way that I'm stupid for doing that. But from a risk management perspective, so let's say I buy on this day, it goes up and comes back down. On the end of this day, I'm probably down 60%, maybe 70 between this day and this day. So let's look at it. That's October 23rd. So let's go to the 23rd. Well, I guess that's okay, 24th. So we'll do the 53-day one, and we'll just do the one that's right here, this 965. On Coinbase. Okay, so 965, right? That's what we bought it at. And then let's go to the bottom of this day for 1027. Which one was it? 90? So it's 565. So 927 to 565. It's like 40%. So I said 60, it was 40. It's still a lot. 40% loss in like 4 or 5 days sucks a lot. It really does. It sucks quite substantially. So if something doesn't move, you can exit, okay? And in most cases, you should. So that's the short answer to that. If it goes against you, if it doesn't do what you expect it to do, you generally bail on the trade. That's just the way that it goes. If you wait for it to take you out, it's usually a bad sign. In this one, it would have worked out in your favor. You're a little bit fortunate on that. But in other cases, it doesn't. So, it's a judgment call, but I will 99.9% of the time favor on exiting this trade. Maybe even on this day. Maybe even on the day that it reverses here on high volume. That may be for me an exit signal. Oh, that's a lot of volume. Yeah, I would probably at least cut my position in half, and maybe I'd exit the rest the next day because it didn't bounce right back. Because with an option, like I just showed you, in 4 days you're down 40%. So depending on how big your position is, that's a huge ass problem, right? Okay, so let's go back to our trade. We'll do both of these trades. So we said this one was on October, well, it's 23rd. I got to write the 23rd down. It's not the 22nd. October 23rd. And here we go. Oh, it's 24th? Oh, it's 24th. I'm having to write over myself multiple times here. Okay, October 24th. Now, I'd mentioned target. I mentioned the target. We said we're going to go for a 90% target. And so on the 24th here, oh, there we go, 24th. On the 24th, oh no, it's 23rd. What the heck? How's that a non-trading day? Oh, it's 2023. I went back too far. Oh, that's my bad. I can't read my own freaking handwriting. My bad. I'm retarded. October 23rd. That's why it was weird. Okay. So now we're going to go, we got 39 days, 53 days. That's right in the sweet spot. We're going to go 53 days. There we go. And we said our target is 126. Okay, so 126. I have an option spreadsheet that isn't really that live right now. I'm just going to do this in a rudimentary style. So I don't know anyone that does options the way that I do them. Okay, I've seen one guy, but I don't know who he is. Um, so I have a target of 126, right? So if you look at this, this is 125. I want to take this, I want to take the option contract. So I got my 53 days, and now I want to pick between all of these different contracts, 80, 85, 90, 95, 100, blah, 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 blah. So I take my target of 126. That's my target, right? Now I know that I want to start at this 110 because you never want to go. So people with options have this horrible habit of saying, "Oh, I think it's going to 126, so I'm going to buy the 125." Doesn't that make sense, right? That makes a lot of sense because you go, "Here's the target, that's what I'm going to buy." But usually the thought process ends there. I did that when I first started out, and then I realized that's the dumbest fucking thing you can possibly do. Unless you get extremely lucky and it blows past your target, in which case you're a genius. But if you have a target, it means you have an idea, and it's not a good thing to do. Because the way this works is that these prices right now are telling you that when this option expires in 53 days, if it gets to 125, this option will be considered in the money. And what that means is that you can exercise the option on it, but we don't care about that. What we care about is what we paid for the option of the 125 strike. So 93 cents. So our actual break-even point when this expires is 125 plus what you paid for it, plus the 93 cents. So my break-even point is 125.93 for this option. Okay? If I let it go all the way to expiration, if it closes at 125.93, I will essentially have made no money and have lost no money. Okay? Fairly straightforward, I think. All right, maybe a little bit weird because I've just been doing this for so long, but that's the way that is. But what about this 120? Well, this 120 I only paid 114, so that closes at 126. I will have made a lot more money. So what you do is you take the 126, you subtract this 120, left with $6, and then you can divide this $6 by the 114 you're going to pay for it, and that is your percentage gain for that option, 526%. Okay, so it's a 526% gain if you buy this 120 option and if it gets to 126 by expiration. Okay, so for this going up 90%, you've made 526%. Okay, so that's why I do the options, because I can make multiples of what the stock actually moves. So if we expect Bitcoin to move, and Bitcoin's going to move these Coinbase and these CLSK and these wolves, then we can expect to make a tremendous profit if we're right. Okay. Now, like I said a little bit ago, options will take your soul, tear it out in front of you, piss on it, and fuck your wife with it. Okay. Seriously. Every dollar you put at risk in here. So if you buy this 120 for 114, and it just starts going down instantly, this will go down dramatically. It will very dramatically. Very dramatic. I just gave you an example of within 5 days you were down 40%. Okay, this may as well be a freaking a penny crypto, for crying out loud, right? With that type of stuff. But if you're right, you get 526%. Actually, you'll probably get more than that because by the time it gets up there, you'll probably have some time left. If you're right, this usually moves faster than that, and you usually make a little more money, sometimes a lot more money. Okay? But you have to be right about everything. Everything. You got to be right about the target. You got to be right about this contract date. You got to be right about the strike price. You got to be right about when it's going to move. Okay? 3-day contract sit for 14 days, it'll be down 20%. Even if the thing goes flat, it'll be down 20, maybe more. Because, 53 days and 14, that's like 30%. But right down 30 to 40 to 50%. It'll be down a lot. So you have to have everything correct. Everything's got to be good. So let's do this. I have the choice to do perpetuals. What sort of leverage would you use if you didn't have to do options? Okay. If you're going to do perpetuals and leverage, it's very dangerous, and there's different ways to do it. You can go really high risk, but like with options, you have to be very precise on your entry. Okay. Where's my... Oh, here it is. You got to be extremely precise with your entry. I mean, you're looking at these charts, okay, and you're looking to enter at extreme. Back when I was doing leverage trading like that, I took a lot of very small trades with higher leverage at certain points. So right here, I'm looking to take trades right there. I'm looking to take trades right here. Maybe right here, but not so much. It wasn't that great. But I'm really looking to take trades at really opportune points with fairly high leverage. So what that means is that anything over like a 10x to me is really high leverage. Obviously, you have liquidations. So the whole point is to find, when you're doing that, Alex, you want to find a place where you have the best possible stop loss. Forget what it's going to do. Okay? 100% forget where it's going to go to the upside. If your shirt's not going down anymore, that's when you want to start looking to buy. Okay? Because it's not about how much money you're going to make, it's about staying in the trade. And you can't stay in the trade if you get shaken out. So this has already had like a menagerie of shakeouts. This one didn't work, right? So this was looking really good. Really low volume. It tried popping up, didn't work, came down, undercut the base, which means it was a dead trade. So you really can't enter here, but even if you did, you get shaken out again. And then it takes all this garbage bullshit, tries to go up, fails, comes down, undercuts and rallies, which is good, then gets tight, and then shakes out again, then kind of starts to go. So you're actually looking over here for the leverage trade. Up here's a little riskier because if you notice you're in the middle of a lot of chop, so unless you really want to give this thing like a full-blown 10%, it's going to be difficult. If you can give it a full-blown 10%, you can probably try to hold on, but be ready to take that loss because it's freaking crypto. Are you not in the US, Alex? Thoughts on Solana? I was a big AVAX bull, but ditched it because I no longer feel a ton of conviction. Bought Solana on the dumps to the 120s and haven't looked back. Solana is good. Yeah, Solana's good. It's starting to move right now. It really wasn't moving, but it started to move late today. So it's on its way. It's got a cup and handle. Yeah, if you're in the goddamn power hour, Ian, you wouldn't be asking that question. You'd be looking at my newsletters every day with Solana on it. But goodbye in the 120s. Yeah, so these were all of our other alerts on this name. This has been a really, really good behaving name. It just needs some volume, and it's good to go. But yeah, if you're looking to buy, if you are, then why are you asking me? I guess you just don't show up to Saturdays, huh? Australia, the cross margin leverage position since October took some profits in March but stayed in the trades. Is that expensive, Alex? You can what exchange do you use in Australia? I really do need an account on one of these leverage exchanges. I want to trade Bitcoin how you're talking about, Alex. I cannot find a freaking exchange to do it on, and it's driving me batty. Abs because I was drooling over these setups that I was telling you about, drooling over these right here. Drooling, drooling, drooling. Bybit? Or are they non KYC or something? Aren't they a little shady? I've heard people have problems withdrawing that. I don't know. But anyway, I think we're still in a good spot. But the liquidations are tough. The whole point about that leverage trading, Alex, is to not get liquidated. Absolutely not. So here's what I would say. In that situation, whatever you want to lose, whatever money you don't want to have, if you can put a stop loss here at about the 68,525, whatever leverage you can get and manage that, you can do that. So but that's if it breaks out. If it doesn't break out, like I said, you're gonna lose it. Just be comfortable with that possibility. I'd say it's like a good 60% chance you get stopped out if you do this here. But the point is to take amazing profits, right? So if you get an amazing profit and things are rolling over, because one thing that happens with leverage trading that's not really well talked about, but once you experience it, it sticks with you. Is that once you get out of a leverage position, you lose that good stop loss. So, I mean, they can probably force exit you. I got forced on a BitMEX trade years and years and years ago with one of the Power Hour members back in the day. We both got forced on a huge XRP rally, forced to exit at like the best place. It was just one of the luckiest things that ever happened to me, and we did get forced exited. But if you can keep that all the way up, that's freaking bonkers. But so the whole point, Alex, it is about where your stop is. You want to make sure your stop will never get hit. Ever, 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 ever. And you only have a few places to do that. So I thought this was a pretty good opportunity down here. Pretty much where my alert levels are, for the most part. They're not perfect, but they're pretty good spots. So this breakout here at 69,272, you can probably go under this. Your best one, though, is under this, because this is the whole handle on the daily. If you can get down to this, like this 66 whatever level down here, if you can get down here and have a stop there that you can keep, this will only kill you on a failure, like an overt failure. This could chop around for however long and then go back up. But if you got something from October, Jesus Christ, yeah, I would just hold on to that. Just hold it. Um, the only caveat to that, I would say, Alex, is that you will eventually find exit signals such as this big red candle here. And when you're up that profitably, when you're up that much, and this is a little risky to do. I'm not going to say this is easy. This is probably harder than options trading. If you exit that here, right, you're going to have a really, really good profit. If you exit that here, if it, you get topping signatures and then it bases out on you, or even, as it goes up, comes back down, you can exit over here. You can get back in and then you can leverage on that profit. So let's say you took 10 grand here and made it into 50 grand or 100 grand, depending on how much leverage you're doing. And then you exit at an opportune time, not a random time, but a good time, an opportune time. And then you can get back in on these breakout signals over here. But you got to wait. You could buy down here if you want to, right? You could buy, like, I do think those are probably, so that's a good time to try, although it would have failed. This is a good time to try. Inverted head and shoulders pattern here. That's a good time to try. That's a good time to try. Yeah, it's not, like I said, it's probably harder than options trading. It really is, because the when you gain good. When you lose good. And so you can only try so many times before it just erodes your account. Then you just have to wait, and be comfortable waiting, which is tough to do. Really, really tough to do. You can, get out of a position, then get back in because you see a small opportunity and have it wipe out like half of your profit. So don't get in that habit. If you exit for a good reason, an excellent reason, and be happy with the profit. Even though there's more trades ahead, be happy with the profit. Don't get greedy. Um, and you know what? You could even like go in with that initial position size and then just start adding to it. But it has to be like at a good spot. It's really hard to do. But if you got some from October, that's like the ballsiest leverage trade I've ever personally been introduced to. So congratulations on that one. Anyway, let's get back to options. So, okay, so we understand this 120 has a percentage gain 526. Now, I will say when it comes to options trading, the risk is that it doesn't quite get to your target, right? So it may not get to 126, maybe it goes to 116. Like that's still pretty good, but you're going to be screwed because you bought the 120. It's eventually going to erode quite a bit of value. So what I usually do is I'll usually take usually try all of these. So 526 for the 120, and I'll try to go closer to where the current price is. So current price is 77.21. It's in between 75 and 80, so it's kind of right here. And that's what these purple and black lines indicate, right? So this is under the current price. This is over the current price. Anything under the current price is what's called in the money. And those are considered the safest ones. So Alex, when you said earlier, or Batman, someone told you to go long dated, or no, you said long dated and in the money. So when you're in the money, you're actually paying less for the you're paying more dollars for the option, but there's less risk in the option because it's already in the money. And what that means is that um, the option's value is derived from the current price of the stock. Okay. So anything in the money has an actual value. So this is $77. This one that's $60, the difference between 60 and 77 is $17. So in reality, this is a real value of $17. Okay. That's the actual value of the option because you could exercise it today and buy the stock for 60 bucks. Okay. So the difference between the $20 and the $77 is called extrinsic value. The $17 is called intrinsic value. And so when you go out of the money, everything is extrinsic value. These options are literally worth nothing in the in the real world. Now you can trade them because they still have extrinsic value, but it's based on a hypothetical move that hasn't happened. Okay? So every option has an intrinsic and extrinsic value, and the deeper in the money you go, so this $5, just to make things easy, so 5 plus 72.75 is 77.75, 77.21. This only has 50 cents of extrinsic value. So it's a very good, safe option, but you're not going to make the percentage gain. So because you paid $72 for this would have to go up $72 for you to make 100% on your investment. Okay, I hope that's clear. It's a little bit of a tricky concept, but you're paying 70, like you're going to give me 72 bucks. If you want $114 back, this has to go up 77 bucks. Okay? And you have to go 77 to 72, put those together. So, but for this one to go up 100%, this 120 at 114, right? It only has to go up $1.14, doesn't have to go up $77. So, it would, like if the stock went up 10 bucks, this would probably double. But you're taking the risk because this is worth, because it's so far from the money, it's worth basically nothing. Okay, so it erodes quickly, and it's just inherently more risky. So I'll try to stay closer to the money, or somewhere in between. So my target is up here at 125. Let's look at this 100. Okay, so we'll take the 100. We have the 126 minus 100 is 26 divided by the 310. 838%. That's even a better percentage for the 100. Hold on a second. I have a feeling I'm doing that wrong. That's way too much. I'm doing this wrong. I usually do it a different way, but I thought I found a faster way, but I did not. So it's 100. Okay, let's do this again. Sorry. 126 minus, let's do the 120 again. Okay, let's do the 120 again. 126 minus 120 minus what you paid for it divided by what you paid for it. 426%. That's better. Okay, that's more realistic. I forgot to take into account what I paid for the option in my equation because I usually do it in the spreadsheet. So let's do the 100 again. So we're going to do the 126 minus the 100 minus the 310 divided by the 310 is 738%. So that's actually really good. That's excellent. And that's even a little bit less risky because we're closer to the money. Let's do the 80. Let's do this 80. So we got 126 minus 80. I wonder if I'm still doing this wrong because these are really good results. 126 minus 80 minus 855 divided by 855 is 438%. Okay, so we go from 438 at 80 to 738 at 100 to 438 at 120. So our sweet spot, we actually make the most money right here. Now I'm not going to nitpick these right here, but somewhere these are going to be pretty close. So the 100 is really good. I would actually buy the 100 in this particular scenario. Okay. Now we have our December 5th date. So let's go back to December 5th. Is that this one? Yeah, it's this one. So let's see what we're worth on December 5th, which is that inverted hammer day. So December 5th, and we're going to go to December 5th, and we bought the 100, right? So December, look, 10 days left. See, we're good with our days. And our 100 should be in the money, and it's worth $42.05. What did we pay for it? We didn't write that down. Date was October 24th, and we didn't write it down. $3.10. So that's what happened. And somehow I closed my calculator. So we're going to do 4205 divided by, this is going to be awesome. This is awesome. When it works out, guys, it works out more than you would ever believe. 13.5. That's a 1,356%. 1,356%. Remember, our target was for 738%. Remember? So, are anyone's minds blown? Now, nearly double what? What's nearly double, Hame? Or Hamal? Sorry, I can't see the L there. What's nearly double? That's 13-fold. Oh, nearly double the 700%. Got you. Nearly double the 700%. Yeah. So, I have done this. I've done this now for years. And under the right circumstances, I get really scared taking these trades. The reason I get scared is because I want to go big. Yeah, no, they can wreck you. I started off by saying before we looked at anything options, these can rip your heart, soul out, rip them out, and fuck your wife with them. Okay, they can. They really can. It's not easy. And there's two ways to approach this, and I probably approach it the wrong way. But when I have a really high conviction rate, I go in pretty heavy with my positions. If it's a normal trade, I'll take a normal. But something like this, I would probably take a normal position size, which for me is 1/5 of the account. That's how I deal with it. Okay. Um, but yeah, so let's do the other one. Let's do the other one. Let's do this one. So let's do number 2. So that's the first run. That's run 1. And so this is February 12th. And okay, so let's do February 12th of the next year, of course. All right, we're gonna pick our expiration. 45 days. Oh, this is close. This is dead on 45. Should I go 45 or 67? Yee, that's a tough one. I'm gonna go 45. I'm gonna stick with my. I said 45 to 50. I'm sticking with that bitch. All right, so let's look at where we are in terms of the date. It is February 12th. Right? Yeah, February 12th. 2024. 2024. February 12th, 2024. Oh, it's right here, stupid. 147.31 times 1 point. We're going to take that times 1.9 because I keep closing my calculator because I have no idea what the hell I'm doing. 279. All right. Now, hopefully, I don't have some stupid stock split in the time. Doesn't look like it. Okay, good. Stock splits screw this all up. I always end up trading in stocks that are really highly volatile, and they always split because they're going up so much, and then it fucks up my chart. Okay, so let's bring out our handy dandy calculator. And geez, 279. There's a lot of strike prices. Look, they didn't go to 270. Jesus Christ, this is gonna make so much goddamn money. Holy shit! Look at this. 279, 245 is only 285. They don't crazy. Did I disconnect? Oh, I reconnected. I think I went down for a second. I don't know why. Okay. You guys with me still? I think I need to take a little break and go fill up my water cup and use the ladies' room. It's 2024. I can be whoever I want. Shut the fuck up. I'll be right back. I'm gonna get a water break. You guys can use the little girl's room as well. I'll be right back. Ah, damn, man. These options are scary. I'm telling you. Anytime I see numbers that big, I get scared. I do. It's because, and the more I do this, the more I find them. I'm just gonna say that. The more that I do this, the more I find big option money like this. I find it all over the place, and it's exciting and scary all at the same time. I think you need to come up with a paradigm to just like hold on to them. Anyway, okay. I think this is gonna be big because right there you can already see you got a $34 delta. This says 285, and with the spread at 181, you're not even gonna pay 285. We'll do the math on 285, but you'll probably pay like 250 for it. So that's gonna be freaking awesome. Okay, so let's do the 245 math. I'm just gonna write this down. We're gonna write down 285, and so let's do our math. We're gonna do our target of 279. Not sure I got the 0.3 from. Oh yeah, because that's the calculation. 279 minus 245 minus 285. Holy shit. Divided by 285. 11x. Holy shit. I'm a god, ladies and gentlemen. God, if only I had some fucking confidence. I'd probably have, dude, if I had like supreme confidence and like a good programming partner, I should have $100 million right now. We should be running like one of the biggest fucking trading outfits on the goddamn planet. Cheese and rice, people. I'm gonna say cheese and rice instead of the JC thing. All right, let's do one further in the money. 245. Let's go to 220, and that is 505. See, um, so I discovered this many years ago, but like I just said, I see this big money more and more and more, and I've always trained myself for big money trades. Okay, it's hard to manage the size. I've got big size now, not massive size, but big size, and man, is it fucking scary. Okay, um, but man, these opportunities, I keep seeing them when I do these back tests like this. The good ones I see over and over and over and over. Like it's not uncommon. It's not infrequent. You have to wait for them. They're not here every day. But goddamn, if I only get one a year, and if I can take $100,000 trade and 11 exit, that's $1.1 million off one trade in 1 year just by not by trading every day, not by learning what the RSI fucking means and all that stupid shit. By doing this, I kind of figured out the most inefficient thing in the stock market. And it is this. It is the fact that options prices don't reflect incoming volatility. It's hard to wrap your head around, but when you get it, you get it. Options prices can't anticipate a 100% move. Okay. Holy shit. Let's do it for. Sorry, now I'm just on some kind of like I'm a god high horse right now, and I haven't even made a trade yet. I'm telling, dude, I'm with some resources in a team, man. I I guarantee. Look, there's trades like this. I probably miss trades. I probably miss like 60 trades like this a year. 60. I'm not even joking. Like in on any given year, there maybe more than that. On any given year, there are so many options trades worth taking that I don't take because I don't even see them. Anyway, it hurts my soul not making that much money because I know it's possible. I know it can be done because I do it. Just not that scale. How to do options? I'm doing them right now. Okay. What's our target? 279. And we're doing 220 minus 220 minus 505 divided by 505. 10.68. So 1,068%. And so we're going down. So in theory, like we're already going down. So we were at 1,000%, 1,100% at 245, and at 220 we're at 1,068. These are usually on a bell curve, and so as these go down, these will get less impressive. Okay. Now again, going with the thing. Okay, maybe it doesn't do maybe it doesn't go to our target of 279. Okay, so we can go down. We did the 220. Let's do the 190. Okay, let's say we want to take. Let's say it's like you're like, because I get scared. I'm like 1100% is way too much effing money. Like it just doesn't make sense that it would be actually make that much money. Holy crap! I just double clicked the wrong thing. Sorry about that. Um, I got too many freaking windows open here. Okay, so let's say it doesn't go that high. We want to take some risk off the table. So on top of I only do spot and have for like 7 years. Yeah. Um, the other way to reduce risk is to go deeper in the money or more towards the money at least, right? So 279 is like underneath the screen in terms of the strike price. And we got 220, but we can go deeper. We can go 200. We're just going to go to 180 because 1100 is good, but if you can get less risk for like 700%, maybe that's the way to go. Okay. It depends on individual risk tolerances and things like that, but this is an exercise I will routinely do. So let me write it down 180. So, and the price of the 180 is 1035. All right, so we do 279 minus 180 minus 1035 equals divided by 1035. Ah, geez, we're still at 1,056%? You're kidding me. Okay, so now we're running into a problem that does happen, but it's not super frequent. We're going to do 150 next, and we're going to be kind of in the same wheelhouse. So this is a good reason. It's good to do this exercise because, look, if you don't have a lot of money, maybe you want to stick up here. Like this is to be 435 bucks, $4.35. You have to buy them in lots of hundreds. This is 435. 435 bucks. If you have like tens of thousands of dollars, you can buy whatever you want. If you only have a couple grand, maybe you want to buy one of these, and that's fine. Then you do that. If you've got more money, you'll actually take less percentage risk by buying up here. But if you're still getting 1,000%, that's crazy. Okay, so let's do that one. So 279 minus 150 minus 1845 divided by 1845. And now we're down to 600%. Okay, so somewhere between here and 180, it kind of falls off a cliff. But look at that. You can go to 180 and still get 1,000%. That's bonkers. Wow. Okay, so let's go see. We have 4 strike prices to look at. Let's take a look at what they're at on run 2 ended on March 5th, which is actually like really soon. You can make a shitload of money on these stupid things. Sometimes you get lucky and they just run like a motherfucker. Look at that. Goes up to 350 now. Sheesh. So we get it 150 is 82.50. 180 is 55. What? 55? 180 is 55? Is my math wrong or something? My math could be wrong. 220 is 29.20. My math is wrong. Something's wrong. 245 is 1980. Something's wrong with my math. February 12th. Let's go back and double check my first numbers. This doesn't look right. So 245 is 285. Okay, that's right. How did I get 1100%? I didn't get near 1100%. Oh, where did we end up at? Maybe that's the problem. Where did we end up? Our target was 279 and we're on March 5th. Oh yeah, see, we never hit our target. I think we did eventually get there, but we decided to maybe exit on this day, this big ass red day. You could have waited and exited over here or picked another date, but we didn't actually hit the target. That's why these are less than that monster percentage. So not a huge deal, but it is what it is. So this one closed the day here at 216 instead of 279. So that's why, okay. So let's go through the percentages. That at least makes sense. And you're never going to hit your max, not never. You're not always going to hit your max target. Okay, so this isn't. I didn't cherry pick any of this. I hope you guys know. You guys know I don't do that kind of shit. Um, Especially because it's taking so fucking long and it's so boring. All right, so let's do 1980 divided by 285. That was 694%. That's pretty good. 2920 divided by 505. 578%. So it's still really good money. So 55 divided by 1035 is 531%. So actually, this is a good indication. 82.5 divided by 1845, 447%. So something I actually didn't talk about that I thought about, but I just thought it would add some confusion into the mix, is that when you don't hit your target, these lower priced options actually perform better. Because keep in mind, our price percentages derive from 279, and we only got to 216. So if your target was 216, you would have chosen different options. Does that make sense? So instead of 1100%, we basically did about 600, around 600% on average. Still amazing. Still super. No, you're gonna get mad at 600%. I threw 1100 in your face, and now you're mad at 600%. You greedy bitch. But let me tell you from experience, it's hard to hold on to a 600% trade. I've only had a couple of them. I usually bitch out well before that. So looking at this chart, I may have sold here, I may have rebought here. I don't know. Um, I did Nvidia. I did a huge option trade on Nvidia's. Made me more money I've ever made in my life, and it was really scary. It was very scary. It was not fun. I had fun moments, but it wasn't fun until it was like over. It was pretty intimidating, but man, it was a good experience. It's setting me up for bigger things in the future, is what it is. I'm not. It hasn't like settled in my head yet, so it's a little tough. But okay, so let's do this. Let's extrapolate. Let's extrapolate kind of where we're at right now. We talked about the breakouts on BTC. Now we got to circle back to reality, right? We talked about these breakout dates. We chose some breakout dates. We chose this one the day before the breakout, and then we chose this one on the breakout. Well, we're kind of in that territory, right? We got pocket pivot yesterday. So let's take the close of today, extrapolate it 90%. And this is for Coinbase, right? So today is 6/4. And we're looking at Coinbase. And the price closed today at, I guess I should just look at it, 244.20 times 1.9. Because, maybe it'll do the measured move again. You never know. We're looking at 463. And let's go to our options chain. Coinbase, we got 45 days again. So this is different. This analyze tab gives us the history. Trade is current. So the screens look almost identical, but I just wanted to point that out. Wow, 45 days again. I don't know. See now it's real. So before I said 45 days, let's do it, but it's real. So we don't know. If you want to, you can go 73, you can go 45. Let's look at the differences real quick just to give you guys an example of the price differences. So 250 is 24 bucks. And this is 34 bucks. So you're basically paying about almost 40% more for that extra 30 whatever days, 28 days. So it's just pick your poison. Do you want to pay more and get a little bit of insurance, or do you want to stick kind of with the strategy and go the 45 days? So keep in mind, when we picked up Bitcoin earlier, we picked kind of the breakout day itself, right? It didn't necessarily look amazing. And this one we chose before the breakout day because this would have been just too crazy. Because you could have bought this in the middle of the day and not paid as much as you would at the close, and our prices are based on close. So that's why I chose to do that. But you could take. We said we got what 700. Oh no, 1300%. So maybe you made 1,000%. Whatever, right? Who cares? But you made good money. And so we're in the same situation here. Do we buy? Do you like today was a good pocket pivot? Wasn't necessarily the early entry signal, but it could have been good pocket pivot today. Going through moving averages. I somehow don't have moving averages up here. Why are my moving averages? That's a bunch of trash. Where's my? Oh, there we go. Okay. So so these are our 10 and 21 different colors because it is what it is. Bounced right off the 10 and the 21. Pocket pivot looks really good. So this is this is potentially buyable tomorrow if you want to. So we're gonna say 45 days. Now keep in mind these are for the stocks. The cryptos and the stocks are a little bit different. If you want to wait till the breakout day, that's fine. But after tomorrow, you're buying this August because this is too short of a time frame. So let's just do the August actually. Let's just do that. Let's do August. It's more time, but it's going to be what it's going to be. Okay, let's get all the strike prices in here. We have 463. So we already know we're more like this last one than the first one because we don't even get it. So we already know that's going to be $36, right? $33, and we're paying $5 here, so I already know it's about a 600%. 463 divided by, oh, no, minus 430 minus 505 divided by 505. 553%, so it's 430. 553, oops, 505, 553%. And then let's do the 380, which is 805. That's interesting. So we'll do the 463 minus 380 minus 8.05 divided by 8.05. 931%. Look at that. We're already seeing the bell curve err in the side of going deeper in the money as it is. Let's go to the 340. $463 divided by 340. Oops. I wasn't trying to. 463 minus 340 minus, I didn't write it down. What was 340? 1205. 110.95 minus divided by 1205. Wow, 920%. So bell curve's going back down, but not by that much. We can keep going a little bit more, I think. 340. Let's do 300. Is 1875. We'll do the 463 minus 1875 minus 8. Minus 300. Right? Yeah. Divided by 1875. I'm going to start over again. I think I'll flub that. 463 minus 300 minus 1875 divided by 1875. That's back down a little bit. 769%. Okay. So that 300 is not too bad. It's a little bit out of the money, but it's not crazily out of the money. We're still getting 769%. It looks pretty good. That looks pretty good. So that may be the one. The 300. So I know 931 was for that 380, right? But it's much further out of the money, and it's only 150% less. So you do get a little bit of insurance by doing this as well. Again, you take less risk the more closer and deeper in the money you go. So I'm still risky, You know, I still have a lot of risk on the table here at the 300 because 1875. But um, yeah, so just say it gets to 769. So for every single option you get times 7.69, actually be 8.69. You're making $16,293. That's fucking phenomenal. It's absolutely outlandish. That's like real money. Okay, so I'm gonna. That'll probably be my option. I think coin's a good one. Thank you for mentioning that one. It does look nice the way things keep basing on top of previous highs. Okay, let's take a look at CLSK, which is what I was actually going to look at initially. And we're going to go a little bit faster because we've kind of already done most of our homework. In terms of runs, we said that, what did this one, did this one double each time? Like about 90%? So we'll pick our same dates, October 22nd. And this one got all fucking squirrely. See, I wouldn't have held this through all this bullshit. I probably would have got back in over here at some point. So that one went up 150% over 30 days. And this one went up. There's that same weird day, 119%. So this one's really, really volatile. This one goes up a bunch. Had a good pocket pivot. Not the best close. Actually, it wasn't even a pocket pivot. This was not. Nope, this was not a pocket pivot. Not a pocket pivot. So a little bit trickier on this one, but we can still say it would double from 16. So we can still do that. That's fine. It's getting kind of late, 8:30 already. Where the hell's my family at? They get hijacked by somebody? Didn't tell me. I'm gonna do find my family real quick. Why are they by the grocery store? Where the hell they go? In and out? They like left the house, been gone for a while. Um, okay, so let's do one for CLSK. And we're just gonna go double. We're just gonna go 32. So the price is 1609. This is 63, 64. I can't ever keep the same damn format. Man. If I weren't so damn scatterbrained, I'd be amazing. 1609, we're going to go for 32 times 2 equals 32. I'm just going to call it 32. And again, we're going to do the 45 days. Oh, 108? That's really going to impede our progress right there. 45 to 108, that's over twice the time. This is going to be really fucking crazy. 2 to 370. Yeah, I guess. Yeah, whatever. God damn it. All right, I guess we got to do this crap. So something interesting when you deal with these lower dollar stocks. This one's 16 is not too bad, but if you look at options on anything under like $10 or around $10, 10, 11, $12, it's almost impossible to trade options because you're paying a dollar for every dollar it goes up. You can't do that. It's just too. So here $19 is 320. Here $23 is 230. That's about $1 over $5 or $6 or $7 range here. You get into something like an Apple, which I think isn't crazy expensive, and it's a lot nicer. It becomes a lot better in terms of dollar per strike price here. So we're a little bit low, but we're not bad because we're looking to go to 36. So 36 is on here. It's a dollar, so you can't buy that. Can't buy that. That's not quite 100%. That's 3. That's over 100%. So we're gonna look at we'll just choose a few. We'll just choose 17. Yeah, so we'll look at 36 as our target. We're going to look at 32. Start with 32. And then we'll do 28. And then we'll do 24. Guess we'll go in fours. 20. And then we'll do 16, which is one strike in the money, which isn't too bad. So 32 is 130. And the spread is kind of wide, but it's not horrible here. 28 is 160. 24 is 215. 20 is 290. And 16 is 410. All right, so let's bring out our handy dandy calculator, which I keep closing. Is anybody still with me? I used to get more people on my streams. I guess I should get on YouTube more if I actually gave a shit, huh? Okay, so we're gonna do what? 32. 32 is 130? Well, that's stupid. Why'd I do that? I have to do 28, not 32. Okay, so 32 minus 28 minus 1.6 is 2.4 divided by 1.6. That's only 150%. In case you're wondering, that is the minimum I will even entertain for a trade, is 150%. Because if you're risking 100% of your capital, you better at least make 1.5. Normally, I like to take trades that are 200 plus. Like to. Sometimes you don't get the chance, but. So that minus 24, 32 minus 24 minus 215 divided by 215 is 272%. And then we're going to do 32 minus 20 minus 2.9 divided by 2.9. That's better. 313%. That's good. Anything over 300% is usually really nice. It's rare you get those 700-800% on the targets. It really is. And you only do that when you go up like 40 to 80 to 90%. You won't get that with going up 20%. If you go up 20, usually I only go for 20% targets. But just because these stocks are so volatile, and if Bitcoin's going to go on a big move, then I think that could be good. So, okay, so we got that. We got, let's do the 1632 minus 16 minus 410 divided by 410. 290%. Okay, so it looks like 20 is kind of the max for CLSK. And you can kind of see the stark difference, actually, between CLSK and Coinbase. Coinbase was 769% to go up 90%. And CLSK is only 313% to go up double, a little bit more. So you can see the volatility, although there is more days here. So that is a consideration. I shouldn't forget that, but I usually don't go out that far, 108 days. But this isn't a very highly traded stock, and so they didn't. If I go to 45, I'm sure it'd be a lot better. Let's just do 45, just a couple of them. So like I said, I think for that one, I probably would do the 16. It's only like 23% less for less risk. So I'll do the 16. So I'll do the 32 minus 16, and this one is 235. And that's 580%. So that's a big difference, 290 and 580. And that's just due to how many days you're buying. So, and that's just for how many days you're buying. So, yeah. So I don't know. I don't know. Maybe I'll take if Bitcoin gets going like tomorrow, I'll probably take this 45 one. Yeah. So CLSK, that's for which? Oh, that's for the September expiration. September 20th. Yeah, so that's that one. This one is 45 days for July 19th. And yeah, I think the 16 for July 19th is good too. I think that's pretty good too. So, you know, I wonder if there's some. I know there's some Bitcoin derivative stocks, like actual, like what's MicroStrategy? Isn't it MSTR? Yeah, it's MicroStrategy. This had a hell of a run this last time around. Jeez, I usually never look at this, and obviously MicroStrategy has a big old cup and handle on it too. Its earnings are garbage, but it pretty much runs on Bitcoin. Doesn't really run on earnings. Huh? What the hell? Why did you do that? Wow, 1999 is $2,000 stock? Jeez. So this rallied 132%, even higher than that, but it definitely got volatile. And so it's probably going to be a fairly expensive option due to the volatility. There's that crazy shakeout day. And it rallied right back. That's a toughie. That's a tough one to hold on to. These, like I said, sometimes these aren't easy. But that would be a crazy rally because look at this didn't have near that kind of volatility going into this rest. That would have made a ton of money. If you can catch that incoming volatility, that is the best, absolute best thing you can do. And all you can do is buy good setups, and you don't know what they're going to do. But when it happens, obviously, you're thankful for it. But this is a pretty good cup and handle. You got good support right there. Your volume's decent. It's not great on the right side of the structure here. Your buy point would be there about 1735. You just kind of maybe take the 20% just as a to 21.24. You do some quick math on it, see if it's even worth looking into. For 20%, it's probably not. 21.24, we'll do the 1900 minus, it's going to be 100%. Wow, it's 50%. See, you don't want to do that because you're risking 100% of your capital. You can't buy something that only pays 50%. You just can't do it. So you have to expect an outrageous run for MicroStrategy to make any kind of profit on this. These are the ones that the option sellers love. I want to buy the ones the option sellers hate. So I want to do the opposite of what option sellers like to do. That's probably a good strategy in and of itself, as a matter of fact. If you want to buy options that option sellers hate to sell. I make no money on that. Yeah, it's going to go up fucking 300%. I want to buy it because it's low volatility. So, all right, guys, that's all I got for you tonight. Wow, a whole 2 hours. There you go. I think it's good homework though. I think BTC is a good spot. Um, overall, I like what it's doing. I think it's good. I think BNB is leading the market at the moment. Just having a blockbuster day yesterday, and then looks like doing okay today. We'll see what it does overnight. But Ethereum lagging a little bit, but could get going any moment. Solana looking good. Started to get going today. Just a tiny bit though. No, really nothing major in terms of volume, but it had a nice move midday. Maybe trying to hide some buying pressure from the chartists right there. We'll see. All right, guys, have a great one. Stay safe out there. Thanks for doing this with me. I know it focuses me, makes me better. Um, if anyone is a coder or programmer wants to work on shit like this with me, and we can become billionaires together, I do truly believe that. So, anyway, all right, guys, have a great day. See you later. Bye.